You can actually see that Bitcoin's following a very rhythmic pattern ever since inception. It tends to have these big blow-off tops every 4 years, and then it corrects, and then it consolidates, and then it eventually shoots up to another high. And so actually, when you zoom out, that 2017 high didn't look any different than its high from 4 years before that or 4 years before that. My case since early 2020 has been that probably, non-zero is appropriate now, and that can mean different things for different people. Basically, I think that 1 or 2% at minimum makes sense for a lot of people once they understand it. I view Bitcoin, for example, as an emergent store of value. So it's because of its volatility, it's kind of currently being in the process of finding its total addressable market. So it's a very volatile asset. So it's basically, technically, it is a store of value that can be self-custodied and basically held outside of the system, similar to gold. But because it's so volatile, it's more like it's an investment in the idea that it's becoming a store of value rather than one already, except for people that are really hardcore with it and kind of just completely ignore that volatility. And so eventually what you do is you devalue the currency, which basically reduces the debt load as a percentage of GDP, because you boost nominal GDP through inflation and growth while holding rates below the inflation rate. And so, that's how they got out of the 30s and 40s trap, essentially. And so we're kind of going through the same cycle now. But of course, if you're a bond holder or a cash holder, you do very poorly in those types of decades. You can actually see that Bitcoin's following a very rhythmic pattern ever since inception. It tends to have these big blow-off tops every 4 years, and then it corrects, and then it consolidates, and then it eventually shoots up to another high. And so actually, when you zoom out, that 2017 high didn't look any different than its high from 4 years before that or 4 years before that. Basically, when I first analyzed the crypto space in detail back in 2017, I passed on it. It was late in that cycle. We had that really euphoric price action. It basically made it so it was a big enough asset that someone like me that looks at multiple asset classes, it basically became on my radar. But the combination of euphoric price action and the big dilution among all these different altcoins and everything really kind of put me off the space, and I passed on it. So a lot of it comes down to the fiscal situation. The biggest inspiration for me was Ray Dalio, because he popularized the idea of the long-term debt cycle, which is basically that you go through these periods of, the normal 5 to 10 year business cycle where the market increases debt in the system. Some of it's productive, but then towards the tail end of it, it starts to become unproductive and speculative. Eventually, there's some sort of catalyst that results in a deleveraging, and so you reduce debt, you go into recession. In early 2020, I became bullish on Bitcoin because the biggest downside of cryptocurrencies is, unlike say fiat currencies, that they're mandated to be used by a government, and then you have precious metals where there's only a handful of precious metals, you can't make more of them. You can basically, they're each limited to how much we can extract from the earth. You can't just make a whole new precious metal to compete with the existing ones. So basically some sort of security flaw could take it to zero, right? So in a classic sense, there are people that'll never sell their coins, and they're willing to buy it. So that kind of makes a floor for how low it can go, right? So the joke is if Bitcoin goes below a certain price, I'll buy all of Bitcoin, right? So it literally can't go to zero unless, of course, something breaks the chain. So some sort of persistent, say 51% attack that can't be addressed, or other sort of security issue, maybe some sort of massive bug that say results in an unintended fork and breaks the community. There are kind of tail risks I can imagine that could break it. But the downside of cryptocurrencies is that anyone can make a new one, and that threatens the value proposition, even if each individual currency has some degree of scarce monetary policy. And so really what it comes down to is whether or not one or two of them can develop a strong enough network effect where that long tail of thousands of other currencies don't matter. Kind of like how if a certain technical protocol takes over, like the whole internet runs on TCP/IP, it doesn't matter if there's like copycats out there, because it's the network effect is so strong that this 50-year-old technology has become the foundation of the internet and is really kind of still going. So as a base case, I still expected to have a pretty good 2021. I warned in my research service back on November 22nd that it's probably due for a near-term correction, just because it was rather overbought and came very far really quickly. I started to see a lot of euphoria, and we've kind of had that consolidation, that correction. And so I'm watching the $20,000 level very closely. because until it breaks over there, it's at risk of further corrections and consolidations. But once it punches over 20,000 firmly into new all-time highs, the ceiling above that where it can go is rather high. And so I don't know if that's going to happen next week or 2 to 3 months from now. But as long as it kind of does that over the next several months, then I think the bull market's intact. Basically, my case since early 2020 has been that probably non-zero is appropriate now, and that can mean different things for different people. Basically, I think that 1 or 2% at minimum makes sense for a lot of people once they understand it, and then of course some people are very high conviction on it, and so they can dial it up. And so I think 5% is reasonable for someone who is pretty solidly bullish on it. Going up to 10 or more percent can make sense. But then once you get into really high levels, that's when you can have these big drawdowns that start affecting your overall portfolio. But I think if you were to have, say, a coordinated band where U.S. financial institutions are not allowed to connect to the Bitcoin network, European financial institutions not allowed to connect to it, we're already seeing that out of China. If you were to have that all kind of happen, that could really keep the price low for many, many, many years. And so I don't know if I don't think that'd be enough to push it to zero. But that would be one of the most damaging cases from an investment standpoint. And I think, eventually it could still potentially even win against that scenario, because it's like one of those things where countries that move to ban hard assets are generally the types of environments where you end up wanting to own hard assets when you look back several years, right? So they don't ban those assets when things are going good for their currencies, right? So I think, Bitcoin could eventually make a comeback, but that would be one of the major tail risks that could that could bring it down in price considerably. And so I think that that's kind of a headwind that could face markets. But I think that overall, when we look back again from like towards the end of this decade, I think there will probably be a dollar bearish environment, because I think the United States is probably going to increase its money supply at a faster rate than other developed countries. That's what we saw over the past 2 years since say COVID. And so I think that's set to continue, with the U.S. probably having somewhat higher inflation rates than Europe or Japan, and holding its rates at a similarly low level. And so we end up with more negative real rates than some of those other countries. The big correction we had, if you look at, for example, Bitcoin's price history, this 50% correction puts it in the top 6 of all-time Bitcoin corrections. And so it's at the point where a lot of the froth has been removed. The consensus is pretty bearish on it now, especially for people that are outside of the crypto space that are looking in on it. They look at that chart and they say that's bearish. I think it's going lower. In addition to the normal demand for Bitcoin, there's also demand for that neutral arbitrage trade, where you could buy Grayscale at that's the Grayscale Bitcoin Trust. It's one of the publicly traded vehicles that people can access Bitcoin with, and generally those shares trade at a premium. So if Bitcoin, for every dollar worth of Bitcoin the trust holds, the trust might trade at $1.25, right? So you're paying a 25% markup, and that changes over time. So I would say that for it to actually go to zero, it would take some sort of major security flaw probably to bring it all the way down. I view Bitcoin, for example, as an emergent store of value. So it's because of its volatility, it's kind of currently being in the process of finding its total addressable market. You can actually see that Bitcoin's following a very rhythmic pattern ever since inception. It tends to have these big blow-off tops every 4 years. I think there will probably be a dollar bearish environment, because I think the United States is probably going to increase its money supply at a faster rate than other developed countries. The big correction we had, if you look at, for example, Bitcoin's price history, this 50% correction puts it in the top 6 of all-time Bitcoin corrections.